You see, there's a fundamental truth about the markets that most people never grasp. The big money isn't made in the little jiggles. It's made in the massive, sustained price movements that carry assets far from their starting points. These aren't just price increases. They're wealth-creating tsunamis for those who know how to spot them early and, more importantly, have the discipline to ride them. Have you ever watched a stock soar 300% after you sold it for a quick 10% profit? That sinking feeling in your stomach, that realization that you just traded pennies when dollars were on the table. If you're nodding right now, you're not alone. What if I told you that most traders are systematically trained to fail by focusing on exactly the wrong things? It's true. While everyone else is obsessing over the daily noise, the minute-by-minute fluctuations, and the constant market chatter, the real wealth builders are silently positioning themselves for the explosive trends that actually create fortunes. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the globe. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Has this ever happened to you? You buy a promising asset, it moves up a few percentage points, and you quickly sell to lock in that profit. You feel smart, satisfied, until you watch that same asset continue climbing for weeks or months afterward, reaching heights that would have multiplied your initial investment many times over. That's not bad luck. It's a pattern that destroys more trading accounts than any market crash ever could. The real enemy isn't market volatility or unpredictability. It's impatience. It's our hardwired human tendency to grab immediate gratification instead of waiting for the truly significant rewards. While most traders are celebrating their small wins and frequent trades, they're actually sabotaging the very wealth they're trying to build. Stay with me until the end of this video, because what you're about to discover might completely transform how you approach the markets. I'm going to show you how to identify these explosive trends using one surprisingly simple technique that the most successful traders have used for generations. The approach I'm about to share doesn't require complicated technical indicators or expensive software. It doesn't demand that you quit your day job to stare at charts all day. What it does require is something much rarer in today's fast-paced market environment: the ability to distinguish between meaningless market noise and genuine momentum. Imagine being able to look at a market and instantly recognize the difference between a temporary price bump and the beginning of a major trend. A skill that lets you position yourself ahead of the masses who will inevitably pile in later, driving prices even higher. This isn't about predicting the future. It's about reading the present with clarity that most traders never develop. The question isn't whether these explosive trends exist. They happen all the time across every market. The real question is, will you be ready to capture them when they appear? Or will continue to miss these life-changing opportunities when they emerge? If you want more insights on identifying explosive market trends like these, hit that subscribe button now. I'm constantly sharing strategies that most traders overlook until it's too late. Here's the hidden truth that transformed my own trading journey. Spotting a promising trend is just the beginning. The real challenge, the one that separates the average trader from the exceptional, is having the conviction to stay with that trend once you've found it. Think about it. We've all experienced that moment of clarity when we recognize a potential opportunity. The research aligns, the technical signals confirm, and we make our move. But then something fascinating happens in our minds. The moment we have skin in the game, our psychology shifts dramatically. Each price fluctuation becomes personal. Each temporary pullback triggers our fight or flight response. And that's precisely when most traders make their fatal mistake. They exit too early, not because the trend has changed, not because their original analysis was wrong, but simply because they lack the emotional resilience to ride the natural ebbs and flows that come with every significant market move. This isn't just a trading issue. It's a profound mindset challenge that affects every aspect of our decision-making process. Behind the scenes of every successful trade lies this uncomfortable truth. The path to substantial gains is never linear. It's filled with moments of doubt, with periods of stagnation, with frightening pullbacks that test your resolve. Yet those who embrace this reality, rather than fighting against it, discover a profound market secret. Uncertainty is not your enemy. It's the very source of opportunity. This brings us to another revelation that completely shifted my perspective. The market is always right. Always. It doesn't care about your opinions, your hopes, or your fears. It moves according to its own internal dynamics, a complex interplay of countless forces that no single individual can fully control or predict. The traders who argue with the market, who insist that prices should move differently, are fighting a battle they cannot win. They're imposing their expectations onto a system that operates by its own rules. The transformative insight comes when you flip this perspective entirely. Instead of trying to bend the market to your will, you align yourself with its momentum. This isn't about surrendering your analysis or becoming passive. Quite the opposite. It's about developing the wisdom to recognize reality as it is, not as you wish it to be. When you see a clear trend developing, you position yourself alongside it rather than against it. You become like a surfer who understands that fighting the ocean's power is futile, but riding its waves can carry you further than you could ever go by swimming alone. The impact of this mental shift cannot be overstated. Once you stop battling the market and start moving in harmony with it, trading becomes less stressful and more profitable. You conserve your mental and emotional energy for what truly matters, identifying those explosive trends early and having the courage to stay with them through the inevitable fluctuations. Now, I want to go even deeper into this topic by exploring how we can distinguish between minor market noise and the beginning of those truly significant trends that create life-changing opportunities. Because once you understand this distinction, you'll never look at a price chart the same way again. If what I've shared so far resonates with your own trading experience, write in the comments, "The market speaks truth." I'd love to know how many of you have already discovered this fundamental principle on your own journey. Let's talk about one of the most transformative revelations in my trading journey. Something that completely shifted my perspective on market timing. For years, I was obsessed with buying at the absolute bottom and selling at the perfect top. I thought this was the hallmark of trading mastery. I couldn't have been more wrong. This perfectionist mindset is actually a gambler's approach, not an investor's strategy. Think about it. When you're fixated on catching exact tops and bottoms, you're essentially trying to predict the unpredictable. You're playing a game of perfect timing in an imperfect world, and this pursuit of perfection becomes the very obstacle that prevents consistent profitability. The watershed moment in my development came when I embraced a fundamental truth. The real money isn't made at these extremes. It's made in what I call the fat, juicy middle of a trend, that substantial portion where the direction is clear and the momentum is strong. Imagine a train leaving the station. At first, it moves slowly, gathering momentum. Then it reaches cruising speed, moving powerfully and consistently. Eventually, it begins to slow as it approaches its destination. The genius strategy isn't trying to jump on while it's still at the platform, too risky, or waiting until it's nearly stopped, too late. The optimal entry is when the train is clearly moving in a defined direction, but still has most of its journey ahead. This middle portion of the move is where the risk-reward ratio tilts dramatically in your favor. Behind the scenes of every successful trade is this counterintuitive wisdom. You don't need to be perfect. You just need to be present for the most profitable part of the trend. This revelation liberates you from the paralysis that comes with trying to time markets perfectly, opening the door to a much more sustainable and profitable approach. This connects directly to another crucial mindset shift: embracing uncertainty as an intrinsic part of the trading landscape. Many traders operate under a dangerous illusion that they can achieve complete certainty before taking action. They want guarantees, they want assurances, they want the market to promise them it's the right time to enter. But here's the uncomfortable truth: the market never provides such certainty, ever. It offers hints, signals, and indications, but never promises. This is why decisive action in the face of calculated uncertainty becomes such a valuable skill. The traders waiting for everything to be crystal clear often discover a painful lesson. By the time absolute clarity arrives, the most profitable portion of the move has already passed. Think of uncertainty not as an enemy to be eliminated, but as the very foundation of opportunity. Without uncertainty, there would be no mispriced assets, no divergent opinions, and ultimately no profit potential. Your edge comes not from eliminating uncertainty, but from becoming more comfortable operating within it than your competitors. The decision to embrace imperfection, both in timing and in information, represents a profound personal transformation for any trader. It shifts you from a mindset of prediction to one of adaptation, from rigidity to fluidity, from fear to strategic action. This journey isn't just about changing how you trade. It's about changing how you perceive risk, opportunity, and your own relationship with uncertainty. Let me show you how these principles translate into a practical framework for identifying those explosive trends while they still have substantial room to run. If you found yourself struggling with trying to time perfect entries and exits, drop "middle path trader" in the comments. I'd love to know how many of you are ready to focus on capturing the substantial middle, rather than the elusive extremes. The framework I'm about to share might seem counterintuitive at first, but it's led to a profound revelation for many traders. The biggest profits don't come from constant activity. They come from patience. We live in a culture that celebrates busyness, that equates action with progress. The trading world amplifies this misconception tenfold. We're bombarded with real-time data, breaking news, and platforms designed to make trading as frictionless as possible. The underlying message: trade more to make more. Join our community of trend-focused traders by subscribing right now. I share these market insights exclusively with subscribers who understand that catching big waves creates more wealth than chasing daily ripples. But behind the scenes of truly successful trading lies an uncomfortable truth. The most profitable periods often involve doing nothing at all. Once you've identified a powerful trend and positioned yourself correctly, your greatest edge becomes your ability to sit still while that trend develops. This patient inaction, this deliberate stillness, runs counter to our psychological wiring. The transformation happens when you realize that trading isn't about keeping busy. It's about being right, and then having the discipline to let that rightness compound over time. Some of my most profitable trades weren't the result of clever entries or perfect timing. They came from simply refusing to exit positions that were working exactly as anticipated. Think about this. Have you ever sold a position for a quick 15% gain, only to watch it continue climbing to 50%, 100%, or more? That wasn't a failure of analysis. It was a failure of patience. The intellectual journey from understanding this concept to embodying it represents one of the most challenging aspects of trading psychology. Now let's explore another revelation that completely shifts how we view market movements. Markets never move in straight lines. Never. They advance, pull back, then advance again in a natural rhythm that tests both bull and bear alike. These fluctuations aren't random. They're intrinsic to how markets function. Every significant trend will experience periods of consolidation and correction that shake out the timid, punish the impatient, and test the conviction of even the most committed traders. The market seems almost designed to separate you from your positions before the biggest moves occur. Developing the discernment to distinguish between a healthy correction and an actual reversal becomes a crucial skill. A correction is the market taking a breath within a continuing trend. A reversal is the market changing its mind about direction. They may look similar in their early stages, but they lead to dramatically different outcomes. Here's the hidden truth that changed my entire approach. Most traders exit during perfectly normal corrections, mistaking temporary weakness for trend failure. They react to price action without context. But price movements only gain meaning when viewed through the lens of overall trend structure. When you understand that pullbacks are not just normal, but necessary for healthy trend development, your entire relationship with market volatility transforms. Instead of fearing these retracements, you begin to anticipate them as natural pauses that ultimately strengthen the primary trend. This mindset shift doesn't happen overnight. It emerges through experience, through watching countless trends unfold, through the painful lessons of exiting too soon and the rewarding lessons of holding through turbulence. The impact of this understanding extends far beyond individual trades. It reshapes your entire trading identity. The real mastery lies in developing an almost intuitive feel for trend dynamics, knowing when a pullback is offering a potential entry opportunity and when it's signaling genuine weakness. This comes not from formulaic rules, but from immersing yourself in the market's language until its patterns become second nature. Let's examine how these principles manifest in real-world trading scenarios and how you can apply them to identify explosive trends with remarkable consistency. If this perspective on patience and market movement resonates with your own experiences, type "patience pays" in the comments. I'm curious how many of you have already discovered the power of strategic inaction in your trading journey. Let me share a truth that fundamentally altered my perception of what creates trading success. For years, I believed that superior intelligence and analytical skills were the primary determinants of profitability. I studied complex indicators, devoured market theories, and built sophisticated analytical frameworks, all in service of making smarter trading decisions. Then came the revelation that completely reshaped my understanding. Emotional resilience matters far more than raw intellect in determining trading outcomes. This insight wasn't immediately obvious. It emerged slowly through painful lessons and honest self-reflection. Consider this reality. During significant market movements, the greatest challenge isn't identifying the opportunity, it's maintaining your conviction when everything around you seems to be falling apart. It's holding steady when media headlines scream doom, when friends question your sanity, when your own internal voice whispers doubts. In these crucible moments, your intellectual prowess becomes almost irrelevant compared to your emotional fortitude. I've witnessed brilliant analysts, people with extraordinary minds and deep market understanding, fail spectacularly as traders, not because their analysis was flawed, but because they lacked the emotional resilience to act on that analysis when markets became volatile. The transformation happens when you realize that it's not your brain that makes you money, it's your stomach and your nerve. This represents a profound paradigm shift in how we approach trading development. Instead of exclusively focusing on analytical skills, successful traders deliberately cultivate emotional resilience, the ability to remain centered amidst chaos, to hold positions through turbulence, to maintain clarity when others panic. This inner strength becomes your most valuable asset in navigating explosive trends. Let's connect this to another powerful revelation that completely changed my trading journey: the concept of asymmetric risk-reward. Here's the liberating truth. You don't need to be right on every trade to be extraordinarily successful. In fact, you can be wrong more often than you're right and still generate substantial profits if you structure your approach correctly. The hidden mechanism behind this counterintuitive outcome is maintaining favorable risk-reward ratios. When you keep your losses small and allow your winners to run significantly, the mathematics of trading shift dramatically in your favor. Even with a modest 50% accuracy rate, you can build remarkable wealth if your winning trades generate substantially larger profits than your losing trades cost. This insight catalyzes a powerful mindset transformation. Rather than obsessing over being right on every trade, you focus on the quality of your decision-making process. You become less attached to individual outcomes and more committed to maintaining favorable risk-reward dynamics across your entire portfolio. Behind the scenes, this approach creates a psychological freedom that paradoxically improves performance. When you know a single loss can't significantly damage your capital, when you understand that your methodology doesn't require perfection to succeed, you trade with greater clarity and conviction. The pressure to be right diminishes, allowing your analytical capabilities to function optimally. The journey toward implementing this approach reveals another dimension of trading psychology: the profound impact of position sizing on emotional resilience. By calibrating position sizes to ensure no single trade can cause catastrophic damage, you create the conditions for maintaining emotional equilibrium during market volatility. Let's explore how these principles converge to create a framework for consistently identifying and capitalizing on explosive market trends while protecting your capital during inevitable periods of uncertainty. If you've experienced this shift from trying to be right on every trade to focusing on risk-reward asymmetry, drop asymmetry wins in the comments. I'm fascinated to connect with others who've discovered this powerful principle in their own trading journey. This framework for identifying explosive trends brings us to an insight that transformed my entire approach to market analysis. Explosive trends don't appear randomly. They develop from underlying conditions that gradually manifest in price action if you know what to look for. Think of markets as having their own language, a complex, nuanced dialogue that most participants never truly learn to interpret. Behind every price movement is a story being told about accumulation, distribution, supply, demand, and the subtle transfer of assets from weak hands to strong ones. The revelation comes when you realize this language can be learned, interpreted, and acted upon before the obvious moves occur. I spent years watching price action, not just trading it, but studying it like an anthropologist might. Observe a foreign culture. I wanted to understand the patterns, the rhythms, the hidden signals that telegraph major moves before they become apparent to the average participant. This immersive journey revealed something profound. The market speaks clearly to those patient enough to listen. Consider how institutional money moves into a position. It doesn't happen all at once. That would immediately drive prices higher, working against their own interests. Instead, these sophisticated players accumulate positions gradually, often using pullbacks as opportunities to add to their holdings. This creates distinctive footprints in price action, periods of accumulation, subtle changes in volume patterns, tests of support that hold despite bearish news. The transformation in your trading results begins when you shift from reacting to completed moves to recognizing the early stages of emerging trends. It's like learning to identify a storm forming on the horizon rather than waiting until it's directly overhead. The signs are there. Increased volatility after a period of calm, expanding volumes on upward movements, resilience in the face of negative catalysts. But most traders never develop the discernment to recognize them. This observational skill doesn't come from theoretical knowledge alone. It emerges from dedicated screen time, from witnessing how real trends develop across different market environments. The insights you gain become almost intuitive, a felt sense of when accumulation is happening, when distribution is occurring, when the market is preparing for a significant move. Let's connect this to another crucial dimension of trading success: having a clear, predetermined plan before entering any position. The hidden truth behind most trading failures isn't poor analysis, it's poor execution resulting from emotional decision-making. Markets are designed to trigger emotional responses. The volatility, uncertainty, and constant flow of conflicting information create the perfect conditions for psychological reactivity rather than strategic thinking. Without a predetermined plan, you become vulnerable to these emotional currents, making decisions based on momentary feelings rather than sound strategy. The paradigm shift occurs when you recognize that successful trading isn't about reacting in the moment, it's about planning in advance. Before entering any position, you must know exactly how you'll respond if things go right, if things go wrong, or if the market simply moves sideways. This isn't just about setting stop losses and profit targets, it's about mapping out your entire decision tree. This methodical approach creates a psychological buffer between market events and your responses. Rather than asking, "What should I do now?" in the heat of the moment, you simply execute the plan you created when you were thinking clearly. This discipline transforms your trading from a series of emotional reactions into a structured implementation of strategic decisions. If you've noticed how emotions tend to hijack your trading decisions, type "planning prevents panic" in the comments. I'd love to hear from others who've recognized the power of predetermined trading plans in their own market journey. Now let's explore a principle that dramatically changed my perspective on market opportunities. There's a fundamental truth that separates consistently profitable traders from the perpetually struggling. The most significant profits don't come from following trends. They come from positioning yourself ahead of the crowd. Consider this revelation. By the time a trend becomes obvious to most market participants, the most lucrative portion of the move has already occurred. The masses only recognize opportunities after they've been substantially developed, when the headlines are blaring, when the story is already being told. But at this point, the risk-reward equation has shifted dramatically. This insight sparked a profound transformation in my approach. Instead of waiting for confirmation from the majority, I began developing the courage to act on my own analysis, especially when it diverged from popular opinion. This path of independent thinking isn't easy. It requires intellectual honesty, conviction, and the resilience to stand apart from the herd. Behind the scenes of every significant market move is this undeniable pattern. Smart money accumulates positions early, the trend develops gradually, and only then does public awareness explode. By positioning yourself alongside the early, subtle signals before widespread recognition, you enjoy both better entries and the psychological advantage of riding the wave of later participants. The awakening moment comes when you realize that consensus is rarely profitable. The crowd's enthusiasm is often a lagging indicator, not a leading one. The newspaper headlines, the trending social media topics, the taxi driver offering stock tips, these are usually signals of a trend's maturation, not its inception. Developing this contrarian mindset doesn't mean blindly opposing popular opinion. Rather, it means learning to think independently, to trust your analysis, and to act with conviction when you identify opportunity, regardless of whether others see it yet. This courage to move before widespread confirmation becomes one of your greatest competitive advantages. Let's connect this to what may be the most profound revelation in my trading journey. The greatest obstacle to your success isn't the market, it's yourself. Your own emotional reactions, fear, greed, impatience, overconfidence create more losses than market conditions ever could. This insight launches you on an unexpected journey of self-discovery. Trading becomes a mirror reflecting back your deepest psychological patterns, revealing how you respond to uncertainty, risk, and opportunity. The market doesn't cause your emotional reactions, it simply exposes them. The watershed moment arrives when you shift your focus from external factors to internal mastery. You recognize that no trading system, no matter how sophisticated, can overcome poor emotional regulation. No technical analysis, regardless of its complexity, can compensate for impulsive decision-making. The decisive battlefield isn't on the charts, it's in your mind. This realization catalyzes a profound shift in how you approach trading development. Instead of exclusively pursuing market knowledge, you deliberately cultivate self-awareness, emotional regulation, and disciplined decision-making. You begin to notice your psychological triggers, the patterns of thought that lead to poor trading decisions, and develop strategies to interrupt them. The true evolution of a trader happens not just in understanding markets, but in understanding yourself. Your journey becomes one of developing the internal governance to execute your strategy, regardless of emotional turbulence. Let me show you how these principles converge to create a powerful framework for identifying explosive trends while maintaining the emotional discipline to capitalize on them fully. If you've recognized that your own psychology has been the biggest factor in your trading results, type inner mastery in the comments. I'm curious how many of you have had this same realization on your market journey. Let's explore a powerful principle that completely reframed my approach to market success. Focus on being right big, when you are right, rather than trying to be right on every trade. Most traders operate under a fundamental misunderstanding. They believe profitability comes from a high percentage of winning trades. This pursuit of perfectionism creates a cascade of destructive behaviors, overtrading, premature exits, and the constant anxiety of trying to avoid any loss. Behind this mindset lies a devastating mathematical blind spot. The revelation that changed everything for me was understanding that trading success isn't about frequency, it's about magnitude. It's not how often you're right, it's how much you make when you're right versus how little you lose when you're wrong. This paradigm shift transforms your entire decision-making framework. Consider this. Even the most legendary market operators throughout history rarely maintained win rates above 50%. What distinguished them wasn't accuracy. It was their ability to capitalize fully on their best insights while keeping losses small on their mistakes. They understood the profound truth that one great trade can compensate for dozens of small losses. This insight catalyzes a complete identity transformation as a trader. Instead of spreading yourself thin, trying to catch every move, you focus your energy, attention, and capital on the highest conviction opportunities. You become more selective, more patient, and paradoxically, more profitable. The psychological liberation is immense. You no longer need to be right all the time to be successful. The journey toward implementing this approach requires a fundamental recalibration of how you measure trading success. Instead of tracking win percentage, you focus on expectancy, the average amount you can expect to make per trade, given your win rate and risk-reward ratio. This metric reveals the true path to consistent profitability. Now, let's connect this to what may be the most illuminating market metaphor I've encountered: the distinction between ripples and waves. The market contains both minor ripples, the daily fluctuations that captivate most traders' attention, and major waves, the significant trends that create life-changing wealth. Ripples are noisy, unpredictable, and ultimately insignificant in the grand scheme. They're the constant chatter of price movement that keeps most traders perpetually distracted. Waves, by contrast, start quietly, gather momentum gradually, and eventually carry prices far from their starting points. The decisive insight is this: a trader who successfully identifies and rides just a few major waves will dramatically outperform someone who spends years frantically chasing ripples. This isn't theoretical, it's a mathematical certainty. The cumulative impact of capturing a handful of significant trends far exceeds the combined result of hundreds of small scalps. This realization triggers a profound evolution in how you allocate your most precious resources: your time, attention, and capital. Instead of constant, vigilant scanning for any movement, you develop the discernment to recognize the difference between meaningless noise and the early stages of something significant. You become selective, patient, and focused on quality over quantity. The true transformation comes when you embrace what might seem counterintuitive, that trading less frequently, but with greater conviction when you do trade, often leads to superior results. This approach aligns perfectly with the market's natural rhythm, where meaningful opportunities emerge periodically rather than continuously. Let me show you how to distinguish between these market ripples and waves, the practical framework that allows you to identify the beginning stages of explosive trends while ignoring the daily noise that distracts most traders. If you've noticed yourself getting caught up in daily market noise rather than focusing on significant trends, write "waves, not ripples" in the comments. I'm curious, how many of you are ready to shift your focus from constant activity to meaningful opportunity? The framework I've shared with you today isn't just theoretical. It's the distillation of hard-won wisdom that transformed my own trading journey from frustration to consistency. Learning to identify and ride explosive trends while ignoring daily noise has been the single most powerful shift in my approach to markets. What I find most fascinating is how these principles extend beyond trading into other areas of life. The ability to distinguish signal from noise, to act with conviction when opportunity presents itself, to maintain patience when everything around you screams for action. These are universal skills that create extraordinary results in any endeavor. I've created this channel specifically for people like you, thoughtful individuals who understand that real success comes not from shortcuts or hacks, but from developing genuine mastery. Each week, I break down these transformative concepts into practical frameworks you can implement immediately in your own trading. If you found value in today's exploration, hit the subscribe button so we can continue this journey together. The community we're building here is focused on substance over noise, on meaningful insight over superficial tactics. I'd love to hear your thoughts in the comments, particularly if you've experienced that moment of clarity when you realized you were chasing ripples instead of riding waves. Just drop "waves changed" everything in the comments if this message resonated with you today. And if you found this conversation valuable, giving the video a like helps others discover these ideas too. It's a small action that amplifies our collective wisdom. There's a video right here that explores how to maintain emotional discipline during market volatility, the perfect companion to today's discussion about identifying trends. Click and continue with me over there to discover how these principles work together to create a complete trading framework. Until next time, focus on the waves, not the ripples. The real opportunities are hiding in plain sight.